see if we go live. All right, we are now live streaming. For the live stream audience, I'm not going to pay attention to the chat much, just make sure that the audio is working. And also, so we are here on the Blockchain Cruise workshop. This is Introduction to Trading. This is the workshop that I normally do for an entire day. I do these approximately once a month, every 3 weeks, all over the world. Normally fairly expensive, and they're meant to help people become better technical analysts, traders using the techniques of technical analysis. Do screen share for the live audience. There we go. All right, so all right, looks like it's good. Sounds good. We're all set. All right, so I actually can't see the screen. You guys can see the screen, but I can see it from my end. And here we go. All right, so my name is Tone Base. Most of you saw me on stage yesterday. I didn't have any slides. I was just speaking. I will be doing a presentation in the main room about the history of Bitcoin and where it's going, and hopefully some projections. This presentation is going to be different. I'm not going to waste time talking about myself. You can just Google the word Tone. You'll probably find me. I've been meaning to do more episodes of Crypto Scam. Not really working. That's not close. That's not close it all the way, but somewhat. It opens. All right, that's okay. I'll just speak louder, and if I'm bothering them, they'll close it. I'm jumping right into my presentation. I want you guys to get as much out of this next hour and a half to 2 hours as possible. I'll lead you right into lunch. And technical analysis is the most important part of trading is understanding prices. A lot of people see it as price and volume. I see it more as understanding price. The best understanding of price is understanding the concept of candlesticks. So to me, everything is about candlesticks. It gives you the maximum amount of information to the price in the smallest amount of visual aid. Okay, and candlesticks is a very old technique. Japanese candlesticks, because hundreds, if not thousands of years ago, they were used to try and predict the price of rice. So the reason why they're known as candlesticks is because they look something like this. Different software has them as different colors. You see a candlestick that is green, that means that the price throughout the time period went up. When you see a candlestick that is red, the price of your asset throughout the period of the candlestick down. These concepts are important. Sometimes green or just empty, and sometimes red is just black, but it's filled in. So that's how you can tell them apart. Different colors and different types of software. The part inside is known as the body. Little wicks. I call them wicks. Shadows in this particular picture. It's referred to as a shadow. So the way you read one of these candles is if it's green, that means the price opened down here. Time period of the candle, the price fell all the way down here, and then it went up to all the way up there, okay, to a high. That's pretty much the. Now, most of them, I prefer to usually done on the 1 hour period, but this technique applies across time horizons. So people use these candlesticks for 1 hour, 1 week, 1 day. So it's pretty much a time period you like. When it's red, that means it opened up there, and then it closed all the way down here, and then you went as low as this and as high as that. And you just have to be aware of what time period the candlestick is actually taking place of. Okay. Candlesticks is probably the most important and the most fundamental part of understanding trading. Okay. And the shape of the candle represents, like each shape of the candle, about what's happening. And the ones on top are my 3 favorite candles that I look for in my trading. This one is known as a hammer, known as a shooting star, and this one is known as a doji. So these are my 3 favorite candlesticks that I look for in my trading. But they're only relevant here at certain times, and I'll talk about that a little bit next. But the idea to recognizing a hammer, small body, whether this body is or positive or red or negative, doesn't really matter. By the way, guys, this presentation is actually public on the internet. So you don't really need to spend time taking pictures. You can just Google for it on the internet. What I'm using for this presentation is called Prezi. So if you Google the presentation website, Prezi, along with my name, you'll find all my Prezi presentations, and this will be one of them. It's pretty easy to find on the internet. If enjoying the live stream right now, this is normally my proprietary seminar, so I'm only I guess doing people a favor streaming it live. This video will be coming down. This is the kind of thing I want people to attend and see in person. Here on the cruise that I'm actually live streaming this as well. So opposite, you get this long shadow that the price traded really, really high, came all the way down, it made this small body. So you get this shooting star candle. And the doji is a very interesting candlestick. Again, I look for them all the time, is when there is complete indecision between buying and selling. The price of this particular time period, it is, the more critical it is. So if this time period is, let's say, 1 day, is that the price, the value of the asset, whether it's Bitcoin, whether it's gold, whether it's a stock, went all the way up, and then it went all the way down, or the opposite, it went all the way down, then it went all the way up. At the end, where it opened in the beginning of the time period, so let's say where it opened in the beginning of the day, that's exactly where it closed at the end of the day. Indecision for traders, they couldn't figure out, do they want to buy into the stock? Do they want to not buy the stock? Do they want to sell the stock? Indecision candle known as a doji. Bitcoin trades 24 hours. Unlike stocks and even most commodities, you're really going to see these bullish engulfing patterns and these harami patterns. Only exist in cases of gaps. So you need a gap. So the stock market closes at 4 o'clock Eastern time. American markets, they reopen at 9:30 in the morning. So you can get this gap. There's lots of traders, and you can find videos where people only trade the gaps. One of the things I used to trade as well, I used to love trading the gaps. When you have one of these patterns, I used to really like this pattern in traditional markets. Stock opened at a gap down, and everyone thought that the stock was going to fall. No, throughout the day, the stock goes all the way up, closes up here. That's up the stock for lots of bullish momentum. Candles were the opposite color, then it would be the reverse, and then you fall all the way down throughout the day or a week. Time period is the harami is the opposite. These bad, and then you gap up and you have one of these small days to the upside during the day, that tends to set it up for more gains. But like I said, these three candles, the hammer and the doji, are basically my favorite ones. You actually read them? How do you see act on them? Well, a doji by itself doesn't mean anything, but when you notice a real trend, from that point, you could act on the doji because it tells you that, yeah, the stock has been trading up, 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 and now there is a lots of indecision, right? So let's imagine each of these candles is one day. These candles is one day. You're looking at it and you're like, oh, we've been trading up, and now traders aren't sure bidding the stock up. And then usually the percentages are in your favor that the stock is now going to start falling down. And this applies to Bitcoin as well, and pretty much any other asset. You really want to look for these candles, kind of a trend established. Important. Work the same way. Shooting stars is one of my favorite candlestick patterns to trade. After I've noticed that the asset has been going up in value long enough, of these shooting star candles, try to act on asset to the downside, are trading below the shooting star, right? You can almost assume that the shooting star will lead you to some downside, but I'm not confident in this down trade until after we are trading below the bottom of this candle. Doji. You see how there's two dojis in a row? Into the stock is actually when we start trading below the doji. That's when I either sell my position that I had in the stock, or that's when I try to look for buy from shorting the position. So when this first doji showed up, executed the short trade because we never traded below doji. So this was the low price of this day, traded below it. So you're never executing the short trade, or you don't really need to exit the long trade. Then another doji shows up, but then the following day you see this big gap down. So sometimes it's good to prematurely get out of the asset with the doji, but this, at the open of this day, is when you really have to realize momentum has probably ended. For shooting stars at the top, at the bottom. So people don't mind seeing a hammer at the top of a range, the hanging man. I'm personally not a big fan of that particular candlestick pattern. I didn't find that to be all that consistent and all that accurate. Okay. But I do look for the hammer at the bottom of the candle. Let me just double check my volume for the live stream. No, it should be good. All right. So the bullish, the bearish engulfing works the same way. Leading up for a while, decent green candle followed by a gap to the upside, a big down day. This is known as a bearish engulfing, and it tends to lead prices down. Situation around, you are looking at a bullish engulfing, and then you're going up to the upside. I'm going to live stream this on the web. However, I am on a cruise in the middle of the ocean. Really nothing I can do about the bandwidth or the speed. happy. That's unfortunate, but enjoy it because this video will only stay on the internet for 24 hours. Remove it. This is the kind of stuff I do in my proprietary trading seminars around the world. Okay, so on this, by the way, and those of you that came in a little late, it's unfortunate. The most important part of the presentation is like the first slide where I explained what a candlestick is. Everything kind of builds up from there. So a candlestick, green or hollow, it opens at the bottom of the body, as down as this, it trades as high as this, and then it closes at the top of the body. Bearish side, the stock or the Bitcoin or any asset would open at the top of the candle all the way down. Then at some point it traded up as high as here. The time period, my favorite time period for any kind of analysis is daily time periods, closed here at the bottom of the day. Some real life examples, okay? This happens to be one of my favorite dojis that should have been recognized by most traders. I saw this happen at the time. Silver was not the asset I was trading at the time. I probably should have, just based on these patterns. When silver was going into its all-time high of 2011, it's like there's really not much. It's just going up, 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 up. There's no clear patterns. Go up. Off day where it gapped all the way up and it traded down. A bit of a bad day here with a red candle. Again, and you can very clearly see this doji right here giving you an all-time high in the price of silver. Okay, this candle happened to take place on a Thursday. The following day was a Friday. You had this small down day inside of it that stayed below the high. Now, like I said earlier, you really shouldn't panic off of a doji like this until the price starts trading below the doji. After the all-time high of silver, really badly to the downside. It gapped about $4 on a $48 asset. So that's about 10%. So that's just about 8%. Okay. Close the gap. I'm not going to talk much about this. There's like amazing trading strategies that are involved in the gaps and runaway gaps where you just keep going. Okay. As you can see right here, there was a giant gap down. Kept going down, but it closed the gap over a couple of days later. And gaps like to close, and you want to see these gaps close. They really help you in your trading. Blue line later on in this presentation. So on Monday morning, silver gapped down, and then the prices completely collapsed for like 20% down over the next 4 to 5 days. Now, what also assisted paying attention to the candlesticks in identifying the all-time high of silver candles. You can see how silver was going up for months. It went from $26, $50, just under $50, about 3 months. And then this was the weekly candle high of silver. So inside this week, you had a clear doji candle. And the week itself was a clear doji candle. It opened here, and this was a complete disastrous week for silver. So, and this is what I mean about how really important these doji candles are. And the more critical the trend, the weekly doji inside a daily doji, take advantage on the trade when the odds are really in your favor of something happening. Okay, one of the biggest mistakes that traders make is over trading. You make a bad trade in the morning, or you make a couple of good trades in the morning. You think it's going to be the greatest day ever, and then you see something and it's not. You're on the roll. You're like a gambler. You enter that trade and it's a losing trade and it's a bad trade. Okay, so you want to make up for that. You're like, okay, well, this looks almost like what I need. Trade on. Really get into trouble. That I know just only trade a couple of times a year. I mostly just trade traditional markets. I don't want to make more than 10 trades a year. Specific things I look for, and if that happens 5 times in a year, that's what I'll trade. If that happens 10 times, 20 times in a year, that's probably where I'll trade. Are really in my favor, and I'm able to put a lot of money behind that trade because I'm very, very confident in it. I really want to learn patience. My private clients are former poker players because that skill transitions very well. If you're able to succeed in online poker or in-person poker, patient, you've learned how to only play cards that are putting the odds in your favor. I mean, reading other people doesn't really help you in the world of trading. Knowing the odds and being patient helps transitions very well to becoming a trader. All right, so let's take a look at another example. This is the S&P 500. So this is the index itself. 100 throughout 2015 into 2016. The first time I ever did this presentation was in was in February of 2016. So some of the charts and some of the screenshots that I took time period. Now the beauty is that this skill set, it's basically timeless. I still have videos from when I learned how to trade back in 2004, and those examples were from like 2003, and it's all about coming out of the tech bubble. So I still have some of those videos, and you're learning how to trade. It's like is at an all-time high of $22. So and those videos still are very, very useful today because the time period of when they were taken doesn't matter. Traders will always use technical analysis to use them. So the stock market, the 2015 was a rough year for the stock market. It was pretty much flat that year. In August, there was a big crash in the stock market, and we were coming out of that crash. And after going up, these are daily candles, up for about a month, you have this very clear shooting star candle. Candle I really look for me to take on a trade. This candle on the S&P 500, I was pretty confident that short-term top is in, stocks to turn around. Some of you might ask, well, how come I don't have this looking candle circled as well? Because I believe that make a trend, even if the 2 days are really, really big, is concerned. I want to see a lot more. Thing here, like this doji is in the middle of nowhere because look, it's just 1 day of upside, and then you get this slash doji. That's not enough. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. Shooting star is something I seriously pay attention to. And the same thing, we're going down, 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 down. We have this stock market day, and then boom, we get this doji. Now I'm paying attention. The market is going to trade above this doji the following day. Then I'm bullish and I'm jumping in on this thing. Okay, it's been fairly hard to identify. Went down for about 10 days, below that bullish golfing, where you had a down day and then you opened below that day all the way up to the upside. Okay, and then we go up here, and then again, a little bit hard to identify. It's not exactly a bearish engulfing. That's not important. It's got some announcements going on. And now we're going down. Here we get one of those hammers. So I really want to see shooting stars at the top of trends, and I really want to see hammers at the bottom of trends. Hammer, there's a good probability that you're going to go back up. Then we start to fall once again. This is potentially one of those bearish haramis inside a candle, and then you trade down after an update. And then you go down, 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 have this very obvious, very huge hammer candle, some upside. I want to see at least 7, 8 days of upside, and then I start looking for my reversal candles. That's a hammer. Sorry, that's a right here. That takes us to the downside. That ends on a hammer, and then the market turns around. Here's a more recent example. This is the NASDAQ at the end of last year. You can also see how it goes down, down, down. Then you get this tight doji style indecision candle that leads us into a swing. And then look at this very, very large and very clear bearish engulfing. It's like the stock market gaps up a lot, and then it just falls all the way down throughout the day. How markets stop, at least short term. Down, reversing on one of those dojis. Again, this was not as long of a fall as I'd like, but again, we put in this candle that gave us this long wick on the bottom, and then we're going up again. A doji here, hammers. So it probably would have been hard for me to time the top of the market here. Okay, so on my website, I'll pull up my website a little bit later, libertylifetrail.com. I have a whole page. I have a whole page of introduction to trading, pretty much what I'm covering here. Over there, it's in print with a lot of links and a lot of additional resources. And there is one of these cheat sheets that kind of all of the patterns in one place. And these are the patterns that I really like. Like I said earlier, the hammer and the dragonfly doji itself, or the shooting star or the gravestone doji at the top trends. Not really a big fan of these 3 candle patterns. I tend to just look for 1 and sometimes 2 candle patterns. I don't normally go into 3 candle patterns on my website for those of you that want to check it out. Okay, any questions on the concept of candles, them, how to use them independently or in combination with other candles before I move on?
On the silver chart, I had a question. There were a lot of there left on the right, yeah. There were a lot of green days, and then nearly at the top you have the red day. Yeah, then I would panic and maybe sell on the red day. So why would you not sell then? And or
I wait for the doji because if you panic on a red day, then you would have sold over here. Yeah. This whole thing. So you can always get back in above the red candle. Okay, you can panic on these red candles to get back into the trend day. Okay, I'm a big fan of buying breakouts. Breakout. People like to buy the dip. I like to buy the breakout. This is because I want my trade to be immediately profitable. Buy the dip, you might have bought it too early. And if you went all in on that dip, you're in trouble. And the dip is fun. I'm wearing the shirt. But in reality, as a trade, buying the dip is great if you're a long-term holder, right? If you're a long-term holder, you buy the dip. the dip too early, save up some money, buy the next dip, right? But as a short-term trader, buying the dip as a short-term trader because it's like catching a falling knife. You see it right now in Bitcoin. As a long-term trader, you're fine. This is when you should be buying as a long-term trader. But as a long-term holder, trader, I was telling people to buy the breakouts. Wrong, so it's a trade. Set a stop loss, get out. Yes.
How do you know if
you are, but yeah, but you properly set your risk management. Idea is the stock market and Bitcoin should always be at a new all-time high, right? So everyone is like, well, I can't buy the stock market, it's an all-time high. Stock market has been at an all-time high more than 50% of the time every day since 1900, right? So that's how you buy and hold, right? Now, if you're going to trade, be immediately profitable, so you can set a break-even stop loss. We will go through like a live example. All right, so let's talk about chart patterns outside of the candlesticks. Okay. Concept is trend lines. Okay. Trend lines could be horizontal, could be on an angle. For me, in order to draw a trend line, I need 3 points. Rare that line with 2 points, and I will show you one of those exceptions for drawing a trend line with 2 points. So in this example, you have point and a third point. So after I have 1, 2, and 3, I'm able to draw the trend line. Once the trend line is in place, I'm assuming that the trend line is going to act as resistance. It's going to act as resistance. Most likely, the asset will not go above the trend line in this case. Okay, it happened again here. Then eventually it broke above the trend line. So if it falls back down to the trend line, now act as support. That's a direction. And notice that they put their support on the third point. If I was making this picture, I would have taken this arrow and I would have put it right here. Because my trend line doesn't exist yet. It's going to support the price of the asset. I would need 1, 2, and 3 points in order to draw this trend line, and then this becomes pretty much my support. Let's take a look at it in reality. This is the price of Bitcoin during the bear market of 2014. Was the Mt. Gox collapse period. We had our second point around here. These are daily candles. So this was probably about 2 months later. And then again, about a month and a half to 2 months later, we had a third point. This and this and this brought in this trend line. The trend line rejected over here. And notice these giant hammer candles with lower wicks that led to sustained reversals of the price. It got rejected by the trend line, rejected by the trend line again here and here. We started to consolidate in this area, breaking the trend line period very well. So many traders were looking at this trend line, and the moment it was clear that the trend line was broken to the upside, there's trading in sync, and everyone bought up Bitcoin in the markets, and it went all the way up. Pretty big move. If you look at if I zoom this out a bit, like maybe 300 bucks, something like that, maybe 400. And we went all the way up to like 700 something. So this was a good 60% upswing in the price of Bitcoin. Or in a short amount of time, in probably about a month. This was very significant. Okay. Now, this is one of those rare exceptions where I drew in the green trend line because this was a very clear breakout point to be relevant in the future. The best way to draw the trend line, I didn't know if I should use the closing prices or the wicks. Question, how do you draw your trend line? Absolute low or high, or do you use the candle's body, open or high? And the answer is no one knows. No preference, or what I like to do is line. Whichever line most contact with the maximum amount of candles, that's kind of what you draw. Okay. Oh, if you're going out for a drink, you want to bring me a little water, that'd be great. So touch it on trend lines. Trend lines are pretty basic. They're pretty standard. I'm not a huge fan of the trend lines. I prefer the next style of pattern trading, general chart patterns. Okay. Very specifically, I love the triangles. I love looking for triangles, and the more obvious and clear they are relevant to me. Also, these bullish flag pennants, pretty good. I like to look for those as well, along with the cup and handle pattern, and I'll show them to you as well. And I'll get to that part later, but very often when there are breakouts, this is the kind of breakout I want to trade. Time high, like we bounced around at all-time high, breaking it, that's when I want to go into the trade. And then sometimes you get a second re-entry, prior resistance now becoming support, and then it really takes off to the upside. So these are the 2 points I entering my trades in, usually to the upside, because all markets tend to go up more than they go down. So once again, you want to put the odds in your favor. Right? And on my website, I have this cheat sheet that shows you all the different types of chart patterns. I look for some of them more than others. I do look for cup and handles, triangle breakouts. These ascending triangles. Here is a descending triangle that I also look for. The metric triangle, part of the bullish pennant as well. Okay, and here's one of my favorite examples in Coin. Descending triangle. So once again, I like to identify 3 points. Point here, you have your secondary point here, and it was long enough to give you 3 points, but you also had a point here. You had 1, 2, and a very clear third point. Back at this time period, this is around June, July of 2014, out writing technical analysis in the crypto space. I was writing at Cointelegraph. That was written just a few days before the break of this triangle, where I'm very specifically talking about, whoa, ignore this. This is 120 corresponding to 20%. Thank you. 20% move. And this is not something to ignore. And triangle broke down, we immediately fell all the way down to reaching the target. I really like these triangle patterns because not only do they give you probabilistically on which direction the price will probably go, it also helps you with it of how far the price will fall when it goes there. Okay, so it's going to go down here. All right, and it reached its target fairly quickly, just in a couple of weeks. Got back there, you can see it right here, just from that prior slide. This low for the second time, we came back and retested it, acted as support here, and almost acted as support there. We broke below it, we come back up, we tested it as resistance this time, kind of fell apart. And notice once again how we reverse off of these hammer candles. Price falls for a significant amount of time and you get this hammer candle. It's very likely that you're going to go back to the upside and look at ended on a shooting star. You go to the downside, a little hard to time. It's not very clear on the reversal side. But then you go back up and boom, there's another one of those shooting star candles that helps you identify the stop, and then you go down. Okay, here's another example. This is why one of my, I guess, coined phrases as I do my daily live videos, that I don't believe in double tops. I don't believe in double bottoms. The double tops are meant to be broken to the upside. The double bottoms are meant to be broken to the downside. So when your asset makes a brand new all-time high, it's in this horizontal channel. But the more times you're hitting this all-time high, the more likely you are to break out above it. This is why I'm a big fan of buying the breakout, because the market, no matter how much you know, the market is kind of designed to make sure 90% of the people lose 90% of their money. Okay, and the things that I learned, the market is not accommodating. You know, a week and a half to decide sell at the all-time high, an hour. And if you happen to be sleeping during that hour, you're never getting out at the high, because you don't, it's not accommodating like that, right? You also don't get a week to decide if you want to buy the low. That's it. And then you keep waiting for that hour. You may never buy that asset again as it continues to go up and up and up and up and up, right? So so the moment you get a second chance to buy the all-time, sell the all-time high, you probably shouldn't be selling it at that point. A second chance to sell the high? No, it's gonna go over and it's gonna break it. And then you're gonna sell the high and watch the breakout go on without you. So these are the kinds of things you want to look for, and the same thing on the other way around to the downside. Okay, so this is what usually happens. A horizontal channel, it breaks above it, it tends to go back down and retest as support, and then you go break out to the upside. So these are the 2 points you want to buy, and this one. Any questions on these concepts before we go on? Yes.
With the double.
It's basically you can impulsively jump into any trade as long as you understand why you're doing it and you understand what reward you're looking for, you're willing to take on. Identify long on the trade, you can impulsively jump into any trade. Plan for what to do if you have no plan on what to do on your impulsive trade. If it immediately goes against you, you get into a lot of trouble very, very quickly. We're going to talk about that. We're going to go through some live examples. Yeah.
How low would you set your stop loss below the support?
We're gonna get to that later. No, I actually don't talk about volume. I don't consider volume to be all that relevant in the crypto world. In the traditional world, it's relevant. Volume is also like its own advanced discussion. And to really understand volume, you really have to know the history of the stock. Volume becomes very critical. You've been trading the same stock, and you kind of understand, and you can identify, okay, these are big institutional traders getting in, these big institutional traders getting out from experience of trading that stock. Jumping from asset, oh, I'm already set, but thank you. If you are jumping from asset to asset, you really don't have time to properly analyze volume. But if you look at this picture, right, especially in Bitcoin, notice these volume spikes. And volume spike. This is when Bitcoin crashed all the way down to 150. Spike is red. So the one thing I will teach you guys on the volume, Bitcoin is 24 hours hard, and it immediately bounced back up. The way I look at volume is I want to see large volume on these hammer candles. That means there is lots of activity. A hammer candle like this. Candle is red. Spike is red. In my mind, this volume spike is actually green. Even though the day ended up being a down day, the wick to the downside was so big, the end was so strong. The day closed 4 hours later, this would have been a green candle, and this would have been a green volume spike. So to me, this is actually a green volume spike. And that is what I want to see. I want to see with some volume. Even when I do the seminar for an entire day, I still don't get into volume. Maybe I'll need to like expand these seminars to like 2 days, and then we can get into more advanced stuff. Something that has not been critical to me. I'm also an options trader, put interest in option volume, only because in option space, and I don't want to be in control of the market. Like one of the rules that I learned is don't be more than in options trading. Don't be more than 10% of the open interest. Open interest is the amount of options are outstanding for that particular time and strike combination. And I've had situations where, you know, me and one of the guys that I learned to trade with, and we're trading together, we ended up being like 50 or 60% of all the option interest in one particular stock. And that was not very good, because now you got a problem. Who the hell do you sell to? All right, let's move on. How are we doing time? Okay, we're good. Next set of concepts, right? So I talked about how much I love the triangles and triangles. So this was when I was really writing a Cointelegraph, and I was focusing on triangles a lot. See it right here, how those triangles did. Oh wait, let me go back. So here was a triangle, immediately met its target. Another triangle immediately met its target. So these are the descending triangles. Another triangle and this triangle. So 1, 2, 3, 4 trading these triangles. Then you had a bullish triangle up halfway. So again, you set the right stop loss, maybe take a little bit of profit. I would say this is 4.5. Another triangle, its target. Bullish triangle, met its target fairly quickly. 6.5 in a row, right? So that 6.5 trade in a row that you would have made correctly, and then you finally hit a really big triangle that broke out in the opposite direction. Symmetric triangle and symmetric triangles tend to be more 50-50. The symmetric triangle happens at the top of a trend. If a symmetric at the top of a trend, it's more likely to break to the upside. Triangle happens at the bottom of a trend to the downside. So I ask the audience, raise your hand if you think this symmetric triangle is taking place at the top of a trend. And who here thinks it's taking place at the bottom of a trend? 2, 3, 4, 5, 6. A few. Okay. How many of you aren't sure if it's taking place at the top of a trend or the bottom of a trend? Answer, actually, because the correct answer is it depends on how you look at it, right? Like if I zoom in enough, it'll be happening at the bottom of a trend, right? But if I zoom out enough, top of a trend, it's hard. It's hard. I'm not saying this is easy. Identifying some of this stuff. All right, question?
Could it be two questions? What do you mean Metis target? What is the target?
Oh, the arrow.
Does it look like a campanello?
This one does. 1, 2, and then 3.
Target.
Okay, so you see how I drew this green triangle?
Yeah.
That part of the triangle is a 30% fall in Bitcoin for $80. Take out above the triangle. My target is the same opposite direction. So my target is upside or $80. Now, we didn't reach that target. We got about halfway there. Okay. Target off of these triangles. Okay. And not actually a breakout because you need 3 points, right? So one, this made, and again, best fit line is really perfect. So that was my best fit line. This is a much cleaner triangle where you start here, point. This is your, now you have also 1, 2, and 3, and you're able to draw this triangle just in time for the collapse of the triangle.
When you look at these charts,
Same.
trading.
I'll pull it up after I go through the concepts. All right, so let's talk about the moving average. What time is it on the ship? No, because my phone says it's 3:30, but I think it's 3 hours off or 4 hours off. My phone is 4 hours off. My computer is on New York time, and we keep jumping through time zones. So this has been a real adventure. Got no sleep last night. That's a decent amount of the room. 100% of the room. Perfect time to trade them. So the moving average, okay? So moving average comes in 2 forms, financial and simple. Preference, which one do you like to use? So what the moving average does is it averages out the last X amount of closing. Again, my favorite types of daily candles. So a 50-day moving average averages out the last 50 days of this. Now, full moving average, you just add them up and divide by 50. Moving average, you weigh it so that the closing prices closer to today are more relevant. This is 20 days ago, 25 days ago, 30 days ago. Okay, so financial will adjust faster to the current environment than the simple. The simple, I guess, and just like line acts as support and resistance, only it's not a straight line, it's a generated line by your software. 50-day moving average is always there. You don't need 3 points. You just need, at least 50-day of prices, 20-day moving average, and 20-day of prices. And it tends to reject the asset until it doesn't reject it, and then it starts to act as support. So here is a rejection, rejection, rejection. You get a breakout, and now it's support, 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 support. So the way you trade this is you anticipate that it's not going to break the line. Confident in actually acting on the trade itself. If it falls below the line for 1 or 2 candles, the moment it gets back over the line, and then you just go up. That's kind of what it is. So here's another example down here. It actually explains it really well. Trend, stock price falls below the moving average when the price closes back above the moving average, right? You went below, then you immediately went above, you can buy it. Went below again, went above, you can buy it. All of your buy points until eventually it went below and you're no longer buying. And here is the moving average for the S&P 500 as it approached the 2008 financial crisis. And it was support, stock exchange. Actually, it went below it and it acted as resistance. It's collapsed. Okay. To simply trade the moving averages is you look for the moving average crossover. Cross. Some traders, longer-term traders, average cross. So that means you would short your stock when faster moving average, which in this case is the red, or the slower moving average. The red is the 50-day moving average. The blue is the 200-day moving average. And then when you have the 50-day crossing below the 200-day, that becomes a selling opportunity to profit from the downside in prices. As, hey, maybe I shouldn't be holding this anymore. Maybe I should sell it, sell my position, and then buy the dip later on. When do you buy the dip? Well, when the 50-day moving average crosses above the 200-day moving average. You can get out here, you can get back in over here. A little more technical and specific on it. I would personally hate this trade during this moving average cross, because I like to see the price pull into the cross, of the cross. So this is the kind of moving average cross that I love. Fallen, and then it rose right into the cross. Get to short, downside. Same thing here. Fallen, and then it bounced into the cross. Price went up, and then it fell into the cross. So I would love to buy it here because the price is right in the vicinity of the cross. Example of Green Mountain House Coffee. This was my all-time favorite stock to trade during earnings season. This stock was making me so much money. I was so disappointed when some private company bought this company out and it's no longer available for trading. Example where there was this moving average cross. And I was very familiar with this stock. That's why it's there as an example. Actually, a terrible stock to trade directionally because earnings were so unpredictable that this thing can move 20, 25% on earnings. And you have no clue what direction it's going to move going into earnings. But that's what I used to trade. I used to trade earnings. There's good strategies to profit without even knowing what direction it's going to move, as long as you know how much it's going to move. I used to do. That's why it was one of my favorite. No longer exists, unfortunately. And here, the price pulled into the cross. Time to buy it because the price is right there along the cross. Okay. See the price consolidate between the moving averages. You can see it bounce off the 200, that get rejected by the 50, supported by the 200, rejected by the 50, starting to get below. And you can see how the price pulled right into the cross. Time to short this stock at $130, all the way down to 40 bucks in under a year, right? And you can see each step of the way, it kept being rejected by the 50-day moving average. So this was a really good example to use. So here you can look at it. You can look at Bitcoin. And again, this would have been a very hard for moving average cross for me, because I would have loved to see the price pull into the cross, which it didn't. Here, the moving average is crossing. It's a good time to buy into the stock. Cross, the stock price is way overextended. The moving average cross is taking place at about $240, but the price is sitting there $20, right? So it's like, so the price is like 50% above the moving average. That's not the kind of, not where you want to buy Bitcoin. And this would have been a terrible trade to buy Bitcoin right here, because it's so extended. Now, if the price would have come down into the cross, it would have been a much better buying opportunity to pick it up off the cross to the downside, cross back to the upside.
50 to 100 is classical for stocks of
Mhm.
the traditional market.
Mhm.
You still use the same.
Yeah, because I'm a traditional stock market trader. It's really hard to get. It's like I know what I'm used to, and I try to apply that concept to Bitcoin. This gets tricky, right? So there's two things here. There's three ways to use all of these techniques. Let's specifically moving averages, right? You can use the default parameters. Most trading applications, trade software, default parameters. And in traditional market, the default for moving averages are 20, 50, and 200. Now, you can stick to the default parameters, potential, your choice, tailor them to the asset itself. Around all week, different numbers. Well, let me try moving average. Let me try 75-day moving average. Let me try 20-day moving average, right? One, and you go, 53-day moving average was able to time everything on this Bitcoin chart for the last year. The only person using the 53-day moving average. Historic work the entire year. Entire next year? Maybe it will, maybe it won't. So some people choose a moving average to the asset itself. Let's say it's not the 53-day, it's the 64-day. And then you trade the 64-day for this asset. You trade this asset, the 22-day for that one, right? I've seen online covered that the 411-day and the 257-day work incredibly well across all stock markets, right? Those across all, so they're not standard T200, a standard that only they use. See it as better statistically than the traditional 50-40, but they don't tailor different assets, right? So, and it's up to you. I mean, there's a lot of research involved here, and you trade what money. Trading a different system every month, you're not going to do very well. Something that works for you, you want to stick with it, and you want to slowly improve it over time. Yeah.
Do you think EMAs, the last chart, those were?
Probably. Again, I don't use moving averages all that much, so it could work better. It depends. I think a lot of it's 50-50 on traders. Some of them use EMA, some of them use SMA. Don't put too many on the same chart.
Do you use logarithmic charts or?
Again, I tend to use logarithmic charts for everything, only because that's also the traditional default in stock market as well. So even if you pull up the chart of like Netflix and Google, stocks that have gone up a lot over the last 10 years, like stockcharts.com will also give you the default of logarithmic charts. This might be actually my last concept. A lot more that I normally talk about, but full day seminar, not a couple of hours. And I do want to get to some live examples, show you stop losses and how that's done. Okay, so the MACD, I'm not really going to explain the MACD. It's, again, standard to move an average. And you look for the MACD cross. I'll show them to you in live action. MACD crosses to the downside. It's an indication you want to short the asset or sell your long position. To the upside, it's an indication that the asset might go up. Same the other way around. Momentum indicators. Another momentum indicator is the RSI. So please, when you guys go home, check out my website. I'm going to pull it up in a minute as well. All of these things are explained in more detail with link references that you can go and check this out. Because I have about, we started like an hour, right? Anyway, I don't know what time it is. We'll just go and then we'll break for lunch. I hope you guys had a big breakfast. Same thing here. RSI is goes between 0 and 100. Default parameter is 30 to 70. Below 30 is oversold. Above 70 is overbought. Above 70, wait for it to kind of turn around and start to go down, and then you're confident that all same thing when we go down and we get out of there, it's an indication that we might go up. So, here's another example, right? So the RSI reaches overbought. Look for a decrease in your asset until the RSI gets to oversold. Here, sold for an extended amount of time. Then once you break out of the oversold condition, that's an indication that the asset will probably go up. Bought condition a few times, go down. Take a look at Bitcoin, and you can see the MACD and the RSI, and I have them circled. Like over here, during this time period, I was doing really well, highs and lows of Bitcoin using the RSI. Well, the RSI was oversold at these two bottoms, and it was that Bitcoin is reaching a high. The RSI went from oversold to overbought. You clearly see one of the shooting star candles I talked about earlier. Indication that we're getting a little toppy, go down. On the way down, the RSI hit the oversold conditions until we eventually broke out, and then we once again went overbought. We went oversold and have circled overbought conditions there. Again, overbought to oversold. The MACD is also clearly crossing, and there the MACD is a little bit lagging. The RSI tends to show you the stuff a little bit earlier. Okay. Favorite ways to use RSI is with a concept called divergence. Concept in trading. So the divergence is when your momentum indicator is telling you one thing, it's telling you something completely different. In this situation, the price is usually the one that tends to be lying to you. Okay, so here's a general example on top. The price has made a brand new high. Momentum indicator, whether it's MACD, stochastic, which I didn't even talk about, or others, are high. That's a situation where even though the price made a new high, it probably doesn't have much momentum left. Around and go to the downside. The opposite. Your price makes a new low, but your momentum made a higher low. Okay, so that's an indication that the price will probably turn around. MACD, you can see the price continues to decline, but your MACD is clearly trending right here. That's a divergence, and then the stock broke out. Using the RSI, you have the stock price made a new low, momentum made a higher low, and then the stock turned around and went up, made a high. The RSI went overbought. Then the stock made a higher high, did not even go overbought, and it made a lower high. And that's an indication that the stock price will probably turn around. Clear situation in Bitcoin where the price high versus the other high. MACD was lower, RSI was lower. That led to a, well, that didn't really lead to it. You were able to spot the price is going to probably take a little bit of a break. Now, the really interesting thing here is you have to understand calculation of MACD and RSI, close of candle prices. So in this case, daily prices. So identifying RSI and the MACD and wicks are completely irrelevant. The fact that this went higher than this is relevant in the case of the RSI, because these are intraday prices. In RSI, only use one data point price, okay? And also, all parameters. Both on the RSI is 14-day period. On the MACD are 9, 12, and 26 period moving averages. Those, again, you can find another magic set of numbers across multiple assets that helps you, or you can tailor them to your asset. In reality, very few traders do that. They just stick to the default parameters because other traders stick to the default parameters. And sometimes it's good to stay in the herd mentality. Okay. Example of MACD. So here's the stock market, again, from the period of 2015 going into 2016. Here, you see how all of these lines are green. The stock market made a slightly higher high. RSI made a clearly higher high, and so did MACD. This is a concept known as confirmation. It's confirming the fact that this higher high is actually legit. At three lower highs, lower MACD and lower RSI, telling you that, hey, things are getting weak. Here, you had a lower closing low, but your RSI and MACD have clearly started to trend upwards to a complete reversal in the stock market, and we've moved from 18,000 on the S&P all the way up to 3,000. We're almost at 3,000 today. Okay, I have like live videos from that time period that I'm going to play for you guys now. Now, the people on the live stream are not going to get to hear the audio. So this is why you attend my seminars, right? You don't get everything for free. Attend the cruise, which was a lot of fun, by the way. But I'll play it for you. Oh, actually, maybe they will hear it. Well, I have a microphone here somewhere. Oh, wait, I took my microphone off. No wonder the sound was low. Oh, that sucks. I gotta put the microphone back on. I'm an idiot. That's okay. Like I said, this is why you pay to attend in person and free on my YouTube channel. All right. All right. Let's try to play this. See what happens. This internally for I'm not sure for what purpose, but we'll figure that out later. Do it.
I'm just going to briefly mention the S&P 500. I didn't get to do it on the last video. This is
We'll just skip this part. Internet at sea. I'm actually really happy with the internet here, by the way. I'm not complaining at all. That's okay. We're low on.
focus video, so I'm not going to talk about it.
That's okay. We're not going to do it then.
Too much. So this is the
Nah.
latest
Oh no, that's fine.
tradable future. As of I don't know, half an hour ago or something.
We wouldn't really need this. It's okay. Basically, the videos
And the S&P 500.
were basically, all right, come on. Here we go. The videos were basically me talking about this time period in real time, okay? This video took place right on like the last day of the year. Now I'm expecting the stock market to have this giant crash and a scare year. One bearish for the year as the market takes off to new all-time highs, and everyone will get fooled. That's exactly what happened at the beginning of the year. Second video talked about this candle specifically, where, and then we fell for a couple of days making this reversal candle place on this candle. Well, yeah, this looks like a hammer, but it's only 2 days. You can't make a trend in 2 days. I'm expecting a lower low. See, is my momentum going to give me divergence or not? And then the third video takes place right after, right on this candle, potential divergence and upside and reversal of the market. So the idea of the video is for you guys to understand how you can recognize these things in real time, really executing the trades, complicated venture. All right, I'm not going to spend any time on this. The C bar is just another representation of a candle. You know, the price always opens to the left. It always closes to the right. Bottom, and this thing is on top. That means the price went up. If it's this is on the left on top, this is on the bottom on the right, it means the price went down. Way to take a look at the prices. Green, they went up. Make them black, and it's lots of information. The last concept that I tend to do is the Fibonacci's. Very little time on it because, like I said, this is a shortened version of the class. And the Fibonacci's is you identify the top, you identify the bottom, it fills in. I'm not a big fan of the 23% or the 76%. Levels in the middle, 38, 62, and 50%. And they kind of act like magnets, support and resistance. You can see it here in this general example. Once you break one level, you're looking for the next level. If you break that level, you're looking for the next level to be a rejection between the levels until you break out again. Directions. So again, here is some kind of an asset. Below, you identify the top, draw in these Fibonacci levels, and when you start to fall, you expect to bounce from one of these levels. It's called a retrace. Too high, you can then take this line and move it to the top, raise all of these lines, and then you would look for a higher level of support. Here's an example of gold. I'm high in gold using weekly candles this time. This trend line was only drawn, again, 1 and 3 points. This is the third point. Once you have the third point, you can draw in the trend line. See, once you identify the high, the bounce back up stopped you at exactly this 38% Fibonacci line. So on the way up, that's where we stopped, and then we started to fall. To identify the new low and the smaller high, draw an additional set of Fibonacci's. And once you started to fall, you can see the initial bounce took place right at another Fibonacci.
Explain why resists and supports at those levels?
No. No, it's just a natural pattern. It's a natural pattern. Lots of people like to apply all of these, like, math rules and golden ratios and all this other stuff. Armstrong, and he uses the number pi to try and predict everything that happens in every market throughout history. I actually really like his work. I applied his work to Bitcoin back in 2014. I published an article in 2014. Hey guys, I have 2 very critical dates. Something really, really big is going to happen around June 15th. That's probably going to reverse the price of Bitcoin to the upside. A bigger event on August 11th of 2017. That's going to be our most important day for Bitcoin. And I wrote this article in 2014. And I had no idea what was going to happen on August 11th. I had no idea what was going to on 2017 going to happen on, I think it was June 12th or June 16th of 2015. Dates corresponded to within a week Greek banking shutdown of 2015 was one of the most important days for Bitcoin at the time. How important Bitcoin was. Here's what happened that in early August of 2017. What happened? Well, more like SegWit happened, okay? the fork was the unfortunate side effect of SegWit, which we needed SegWit in order for Bitcoin to advance. Bitcoin is going to advance without SegWit. That's what led to us on the way up again. Yeah.
For fundamental analysis, or you only look at the chart, or how you?
I generally don't look at the chart. I don't really look at much at fundamental analysis.
There's like a price, and it projects the trend line or something, and then there is some, and yeah, the news is not real, or
weird news. Well, you can't predict the news, so weird news is going to help you or hurt you 50-50. When you use technical analysis, odds are in your favor. So just don't put all your money onto a trade, and half the time the news will help you, and half the time the news will hurt you. Just be consistent. Okay. This is the kind of stuff I teach at my seminar. It's an all-day seminar. Gives you a lot more information. It also talks about, I'm not going to talk about the time indicators or the mark indicators. It's way more advanced, and it's way more proprietary kind of stuff that I save for my private seminars. So back to my website. On my website, there is this Learn Education, preliminary travel schedule. None of it is really in detail. Now let me show you the Learn Tribute. We're going to go to do some live trading right now, actually. Theoretical live trading. So on my website, all of these links are there to help you learn. what I want to say is when people talk about moving averages and stuff, and I purposely put this picture on my website and Learn Trading. Hopefully it'll load. Like there are so many indicators. There are so many trading tools that a person can use. You really don't want to be this guy trading, right? Like one of them is the MACD, one of them is the RSI, and the rest are pretty much 20 others, okay? It probably has about 20 different moving averages here, plus all of these momentum indicators. You don't want to be this guy, okay? This is what makes it difficult to trade when you don't know what you're looking at on your chart. Same thing here. Like, again, somewhere in there, there's the price. It's hard to even find where. So again, how do you trade charts like this? The answer is I don't know, okay? Don't want to do that. And this thing here is also just one person. Prices here, and these are different momentum indicators. So again, you really want to find a couple of things that work for you and stay with those things, okay? Let me get out of here. Everything I showed you for the last like hour and a half, those have all been the basics. So you really want to read all of those sections 1 to 5. My favorite stuff is in section 6. This is the kind of stuff I do in a private, in my own seminars. But my videos explain it, okay? And all of these links are here to explain it. We're going to go and take a look at some live action. So for those of you that asked, where do you draw all this? And of TradingView using this application, and you have a free version of it. Do it now. I have in my videos. Hold on a second here. Wow, internet was working faster before. So this is my YouTube channel. So in all of my videos, if I look at the video from yesterday, all right, here's my own video that I'm actually live streaming here. So in my videos, I thought I streamed the video after this. What happened? Interesting. In the video descriptions, a bunch of affiliate codes, and so you can click on TradingView. So that's where you can find the link. On TradingView, it'll take you to that to the website. All of my charting. So for those of you that are going to be new to trading, there's a free version. There's a 30-day trial for a paid version. You can go ahead and check those out. Things are loading a little slow, unfortunately. So we'll see how good we do on live trading. Here's Bitcoin as of today. I didn't do my live video today for the people. I usually do live videos talking about the price of Bitcoin. Here's the weekly chart. Here are the weekly candles. Right now, I am bearish looking at the weekly view of Bitcoin. I did not get to talk about these numbers on top. If you start watching my videos, you'll hear a lot about that. These are more advanced trading techniques. Here's the daily chart. You can see this giant symmetric triangle that we talked about, and we've broken out of this triangle. So that means that things are not looking very good. Also, once we fell below the triangle and we fell below the prior low, this was another time to go down. Here's a 4-hour chart. the 4-hour chart, live video this morning, but the 4-hour chart helps you identify the low a little bit. Oh, come on. So this green arrow helped me identify the low. So this would have been an opportunity to get in, even though by all other metrics, it's pretty much not very good. But you can see right here, RSI has fallen, has gone from oversold territory. You can see the MACD is crossing. You are below the moving averages. But here, this 9 came in with an arrow. Unfortunately, this is the stuff I don't have time for. We have reversed, but now we're running into the first moving average. So it's possible we'll get rejected here. There are 500 people watching live. They're like used to this. After this 9, we're looking for a 1 to 4 candle reversal and then probably down. So this is around the time where it's possible that we have ended. We'll run from, wow, how low did we get last night? We got as low as 9,200. Wow. Well, there could be some more downside, but there was an opportunity to buy here off of this 9. And this is around the time where you start to reevaluate and to see if you should get out and maybe buy the dip later on. Here's the 1-hour chart. And after this, I'll go through a trading example. So here's the 1-hour chart, which also right here, as you started to go down, you see this very clear doji reversal candle. Like for those of you that were here in the very beginning of the presentation, I talked about the doji candle and how important this candle is to me, right? So, and some of you that do watch me live, you know that when it gets to these 9 candles, or 9 on top from this math formula, it shows up with a green arrow. So when this 8 is coming around and you get this doji, and the following candle starts trading above this number 8 and above the doji, that is certainly a buying opportunity. And this hourly chart, where each candle is 1 hour, got you all the way to another 9 with a red arrow. So there was definitely a trade to the upside from right above this 8. All right, come on, let's draw this in here. All right, I don't know what's going on, but right above this 8, at what price would that be? I don't know. Looks like things have frozen. Oh, here we go, finally. So right above this, right above this 8 was an entry point into the market. It's on a 9. Right around here is an entry at around 9,800, and right around this 9, this is when you want to start thinking about taking a profit. A $2,000 trade, because this 9 showed up at around 11,500. That's a decent trade, swing trade, and it took about 9 hours on this trade. Okay, now we're above the moving average. We're coming off this 9, so let's see what happens. Trade. So I'm gonna. A question.
Simple moving average, RSI, basically. What are those numbers?
I didn't talk about the numbers. More advanced trading strategy. That a proprietary code. it's not mine. It's somebody else created it. I slightly altered it, but it's very, very expensive. Like Bloomberg Terminal is like one of the few places where you can look at them, and that costs $2,500 a month. It's something most traders aren't aware of. It's explained on my website on section 6. The math is there. Anyone else is welcome to program it themselves. Most people take my seminar to get access to this code. Get access to this code. I don't really like to sell anything. All my work is free. All my YouTube channel is free. I don't have newsletters. I don't sell trading signals. All I sell is for seminars like this. These are free because you're part of the cruise. I just sell my time to teach seminars like this for an entire day. They're more advanced, they're more detailed, and they do come with access to this kind of code. And this is my favorite way of trading these days. But I spent 6 years trading with the tools, 6 years plus. Guys, that's how every trader begins. And if you're able to succeed with that, you can then move on to more advanced stuff, basically. I'm not going to get into this one on this seminar, unfortunately. But we're going to go ahead and show you guys proper stop loss techniques. 3-minute candle. So let's see what 3-minute candle looks like. So here's a 3-minute candle. And if I was trading the 3-minute candle, I would have already been in this trade. So a little hindsight here. I would have already been in this bullish trade. So maybe I should go to like a 1-minute candle so we can time a trade I would have done. Let me just show you guys why I would have been in this bullish trade. Watch me understand these numbers. Those are my clients and stuff. So once a 9 comes, it tends to do a reversal. And you can see that this 9, the code put this 9 in here. We're looking for a reversal. One of the best times to buy off of a 9, number trade above a prior green number. Hits the 9 to the other side. I would have entered the moment this red candle started trading above this candle. I would have taken my profit here. I would have entered. I could have entered here on the short side. The moment the 2 started trading below the 1, I take my profit here. Trade the moment the 2 starts trading above the 1. I look for my bullish trade. Now look, we're running into a moving average. That'd be as easy to cross. Now keep in mind, these are 3-minute candles. They're not all that relevant in the grand scheme of things. I'm just using them as an example because we can't sit here, trading daily candles. We'll be on this cruise for a week for me to do a trade of an example of one trade. So using this 3-minute candles, Bitcoin right here. And I'd still be in this trade probably for another 10, 15 minutes. So since we don't have this kind of time, let's see if there's the trade there. Right, so same thing. So you can see right here, this is actually a death cross, right? Because the 50-minute moving average is crossing below the 200-minute moving average, and you can see the price is pulling into the cross. A little bit bullish. Okay, I don't have a trade yet to the upside. Right here, when one of my 2s started trading above my 1. now I'm in the middle. So let's see what trade I have. Now I would not trade this. I would wait for a high probability of a trade. So my RSI is in the middle. It's not really giving me much. I don't know what's going on with the MACD. It's all over the place. I can't really pull it up right now. The internet, but so I'm trying to see if there is a trade that I can execute, and if there is, I'll go for it. But right now, I would not make a trade. So let's see if the candles give us something to put probabilities in our favor.
When there is a breakout, do you average in then, or do you go with the full amount in then, or how do you do that?
Breakout, I go with at least half the size of the position, and then I add to it, at least half. I have no problem going in 100% of my position on a breakout. Catch the dip, I very rarely go with my full intended position. I don't mind, because if it's a breakout, I'm expecting to be a trade. And then I might take half of that trade off the table early. Like, I'd rather go with my whole position, and then a few hours later, take some of my profit. Leeway, worst case scenario, the rest of my position goes to where it began, and then I just keep the profit that I already got. So I go with a much bigger trade on a breakout than on a dip.
So how do you spot the breakout then retest and then?
No, initial breakout. Yeah. Yeah. So right now, I'm starting to time my trade. If I'm going to make a trade here, side. There's a couple of things that are going on here. So this is the breakout that I'm looking for. Like, I'm imagining that these are daily candles. So if these are daily candles, breakout. So if we can get above this line, I would be very interested in buying this trade. Also notice that we went, well, this is across to the downside. I want to see across to the upside, right? So that's unfortunate. But right now, look, you see this green arrow here? This green arrow would have told me to buy it. Okay, so this is the only thing I sell. The only thing I sell is access to this code, only because it took a lot of effort to put together. My code, the code is public. It's freely available, but much lesser versions. Development effort. Putting it in. The math is simple. Programming it in this system is hard. So I'm still looking for my breakout, and preferably it'll come on the next candle. Takes me above this line, I'm in the trade to the upside. So let's wait 20 more seconds and see what happens. Yeah, the original algorithm is called TD. Again, it's in section 6 of the Learn Trading on my website. It's all there. I have one page for Learn Trading. It's all described there towards the end. So if this next candle trades above this green line, I would enter this trade to the upside. It's not the ideal trade, right? Like, I really would have entered right here, and this 2 started trading above this 1. But if this 2 starts trading above this 1, it's above the breakout line. That's an entry for me. So where is this line? This line is at what price? $11,588. The idea, the reason why I do this is because I want to show you the proper use of stop losses. Like, a lot of trading is just patience. There, you gotta wait for your trade because you want to make sure that your trade is instantly profitable. So the next candle didn't get us up there. So I'm going to wait for the next one. Also notice, it depends how we do it, but it's possible that we're starting to form one of these triangles.
You put a buy limit. So if it goes over there, you do it itself, or you wait?
Sometimes I use limits, sometimes I just execute manually. I do limit orders. All right, it's starting to look like one of these triangles, right? One of these triangles. Where is my target, right? So what is it from here to here? It's about $100. So once we break out of this triangle, triangle, assuming it continues to be a triangle, which it probably won't by the time I finish drawing this thing. Be looking for $100. Right. So again, bullish trade here that I have not executed yet. Again, I want to see trade to the upside, and right now I don't see one. If it continues to go down, maybe I'll have a trade to the downside. Trader like in the middle of the day, and I didn't like it. I didn't like the stress of it. I prefer to be a swing trader. I like to let it hang around there for a few days. Right, so this triangle is no longer relevant to the bottom. We're coming up on the 50-day support. Again, I may not have a trade I want to execute here. And that's also important. You don't do it because you're going to lose money. You only execute when you have confidence in that trade. For making my own decisions and not listening to anyone else's trading calls, because you can't do what they do. You don't know when they're going to get out. You don't know when they're going to go in. Now, you can see the support, the moving average is supporting it. The bigger your time frame, the more important the movement is. Okay. So I don't have anything here, guys. Like I can't offer a good trade right now. Like I wouldn't touch this asset. We can go take a look at another asset. Maybe it'll give us something. Right here, I was looking for a bullish trade on a breakout. It never got us there. So if I was going to take a short trade, I wouldn't have timed it right. If I'm looking to buy, I don't just instantly flip and sell. That's not a good strategy. Okay, this is how you get into trouble. But what I wanted to show you guys was stop losses. So you can see how we bounced off the 50-day moving average. Really? Yeah, the internet isn't great here. So I am on a cruise, guys. Like if anyone that's watching this live complains about sound, I should just boot you right out. We're in the middle of the ocean, so don't complain about audio or video. If it's an altcoin, always to Bitcoin. Because that's your opportunity loss. That's your opportunity cost. The opportunity cost is just holding Bitcoin. So who cares? Who cares if Litecoin went from $100 to $300? If it gets Bitcoin, it lost money. You always got to go against Bitcoin. Same thing. Oh, we missed it, guys. This is the 4-hour chart of Ripple. And the buy entry was off the arrow, so we missed it. I should have done this presentation at 6 a.m. But yeah, there was a buying opportunity in Ripple right here. It's coming up on the 50-day moving average, where for now is being rejected, but the buying opportunity was right here off of this green arrow. Also see the MACD cross to the upside. The RSI crossed out of oversold and into neutral. So there were lots of things here that helped you buy this asset, and now it's running into resistance. Go back to the 1-minute Bitcoin chart. Not much. Nothing's going on. I did this in Singapore for a full-day trading course, and I had lots of examples. So we were doing this for like 30 minutes plus. Bearish trades to show an example of how to set up proper stop losses and when. And we were mostly using 3-minute candles then. But here with 1-minute candles, much. We can try 3-minute candles again.
How do these candles actually close in crypto? It's I find it very confusing. It seems like weekly candles can be a rolling week.
Well, no, I mean, weekly candles, I mean, on my end, I don't know if they're adjusted to your time zone, but it ends at 8 p.m. Eastern or 7 p.m. Eastern, depends on which half a year you are with the clock change. I know it's silly. It's a problem. On Sunday, p.m. Eastern Sunday is the weekly close, 7 p.m. daily is the daily close. 3-minute candles, and they're not, again, I don't have a trade here, guys, sorry. My trade would have been here, not to one of my 9s, so I would have exited with a profit on this candle, and I'm waiting. Again, you can also see how we're being rejected by the 50-period moving average. And you guys need a lunch break. I believe that it's 12:30 right now. 12:30. I have a presentation around 1 something in the main auditorium. So catch my presentation there. It's completely different from this. Bitcoin and stuff. And then I'll be back. I'm going to do this seminar one more time, but here to watch it again. If you came in towards the end and you missed the first hour and a half, you'll have to come back at 2:30 p.m. We'll redo all this. Hopefully towards the end, I'll have better show you. But right now, here's the 3-minute chart, right? If I was to go short right now, I would short the moment it crossed below this line and it just did, right? So I would be in this short trade. Stop loss. My stop loss would be set initially this area. Loss. Okay. Now, if we go down a little bit more, lowering that stop loss fairly quickly, I would now lower it per candle. And if the next candle gives me a lower low, my stop loss all the way to the top of the candle. So I noticed the trade, a short trade, I'm in this trade. Where's my target? Well, actually, low. I would actually add to my short position. Oh, God, this just doesn't want to draw. If we go below this line, look to add to my short position. One more tick down, and I would add to my short position. There it is, right? So I'm adding to my short position to profit from this trade. At this point, I'm also setting my stop loss to be above break even. Now, you don't have to add to your short position. But over there, I would see an opportunity to add to my short position.
Proprietary system. It's the same.
I mean, I've looked at it. I've been using it for a long time. I never track my trades. Like, I just know that I make money, and I'm not here to prove or what it is. Again, I started doing these videos for fun. And because so many people were reaching out to me, I had to put in some kind of a paywall on it. But there's literally books written about this indicator, and it's on my website. And you can get the book for free. It's been around for 30 years. I know trading desks that use it. Statistics on it. All right, let's see what's going on with our trade. All right, we saw a short trade. We took the short trade. What am I looking for here? We already made new lows. So, I mean, I'm all set with the short trade. Now, since I did double down, if I go back to the blue line, I actually lose money on this. My initial trade was here. My double down's there. So my actual entry is somewhere in the middle. Okay? So I'm actually looking for these numbers along the bottom to get me to a 13. But like I said, you don't have to double down. This could have been a good enough trade. If you did not double down, then this trade cannot cost you any money. And that's what I mean. You want to take on trades and then immediately be profitable, immediately set your stop loss to break even. Taking profits from there, preferably around this 200 period moving average, or it goes against you and it gets you out with a couple of few spare for yourself. That's how I used to trade. I want it to be in the money immediately. Okay. Otherwise, I'm not doing the trade. I'll sit there all day and not do anything. Eventually, right? I mean, I used to lose a lot of money. Just, no, I got to trade. I got to trade. I got to trade. You wait for an opportunity. I kept trying to get a long trade in. Give me a short trade. I took it. Let's watch it. If the next candle goes lower than the current candle, I would set the stop loss in the middle of the 3 candle, making sure that my initial entry and my double down cannot lose me money. It's coming up in 40 seconds, and we'll take a look what happens. Now, again, I'm zooming out this chart. Oh, and very importantly, right? Like normally, if you're going to take on a short trade to the downside, you want to make sure that the higher level time frame is also bearish to the downside. You're going to enter a trade using the 4-hour chart to the downside and realize, well, how come I was so wrong? Well, because if the people that are using daily charts and weekly charts, and they're more important because their time frames are bigger. Okay, so I'm not even looking at the higher level time frames right now. Right, so if the next candle gives me a lower low, I'm lowering the stop loss. So that's what I'm watching. We broke the moving average. Let me remove this triangle. It just gets in the way. Notice how we broke that moving average, we went back and we tested the moving average, and then we went down. This is exactly what I was showing you when I was teaching you guys the moving averages.
So can I ask what are your predictions for Bitcoin?
Short-term bearish. You see it go to 7,500 because that was the prior high. That would give us a nice base to kick us back up to the upside. Like, I know Bitcoin technology is solid, and I know Bitcoin isn't going anywhere. There's these garbage like Ripple and Ethereum, things that people believe in, and they're going to lose billions, if not trillions of dollars, because there's no competency behind that technology, even if you try to argue that technology is even needed. There it is, right? Low. Yeah, 3-minute candles are much better than 1-minute candles. The stop loss to just above the prior candle. This was a pretty profitable trade, even on a 3-minute time frame. And I don't like small time frames, guys. So I would love to wait about 12 more minutes here, because I'm going to take profit on a 9. Because if this gives me a 9, that's a short-term momentum killer. So this is my trade. My initial entry was here, there. And I thought this was a pretty safe trade. So the odds were in my favor greatly. And let's see how this trade ends. No matter what happens, I'm making money on this trade at this point, because my stop loss is below the middle of my 2 entries. If the next candle starts trading below this purple line, which I didn't even explain to you guys, I will certainly lower this thing even more. And we're almost there. Right? So what can stop the bearish momentum? Well, the moving average can stop the bearish momentum. A 9-candle trend down can stop the bearish momentum. And I'd like to take my profit somewhere along the bottom. I want to wait for it to bounce back up, right? I want to take my maximum profit. I'm speaking in the other room, please. 1:15. So in what, 40 minutes? All right, so it's time to lower that stop loss once again. So I would lower it to just above the top of it. There. That's my new stop loss. All right, now we wait. Let's see what, again, I haven't taken any profit yet. I'm walking you guys through one of my trades. Now, ideally, I'm doing this on bigger level time frames. So it's obviously a bigger chunk of a move. No. The thing is you'd be out within minutes. At least for me. Like for me, scalping is I mean, even if this trade lasts like 15, 20 minutes, that's not a scalp to me. And within a minute, I'll probably get out. Too. I mean, if you go in with like $1 million, the moment it moves 5 cents, you're out. 5 cents, $20 stock for $1 million. 1,000 shares.
What exchanges?
All right, so this candle's coming to an end. We just got 3 more candles, guys. Either way, I'm looking to close this trade right here at this point. This is where I'm looking to close my trade. I wouldn't. This is a theoretical sample. I don't trade Bitcoin. I think it's absolutely crazy. I don't trust any exchanges. I don't think they're competent at all. I think you're just gonna lose your Bitcoin. You're gonna get hacked. They're gonna steal it. I do like BitMax. So the only one I have I have like a discount code for is BitMax. It's a futures exchange. You can use leverage, so you can put less Bitcoin at risk. I don't trade Bitcoin for all these reasons. Pretty amateurish. Put my Bitcoin at risk. Like Apple stock like this. I'm just saying, like, this is how I would trade, but not Bitcoin. Apple stock. I don't trade Bitcoin. I trade traditional markets. I work for it. Or I buy it with my fiat. Like when I used to work at Wall Street, I used to buy it on the street. Meet people, and at coffee shops or meetups, and I would hand them, and they would. Again, I think you guys want to next presentation, so I want to give you at least a half an hour to eat. Wait, 2 more candles. So my stop loss is now here. My entry was here. My double down was there. So if the next candle is trading below than the current candle, I'm lowering my stop loss once again to above this candle. Just above this candle.
You don't do it because you don't cross on the exchanges, but what happens if the exchanges, wouldn't you take the chance to make some profit? That is you can, because again, just in case I break my leg.
Yeah. Right. When my traditional exchanges start trading Bitcoin, I would probably consider it. Doing this. Going for a profit, I wouldn't be out in this cruise. Like, I'd be at home trading Bitcoin. Like, it's a job. It's a job. My job is traveling the world, promoting Bitcoin technology, teaching these seminars, because I have a skill set down to people that are traders that never had real trading experience. So if it's hard to do a YouTube channel and reply to people and come to events like this, I find that I can't focus on both, and I would be a very frustrated trader.
It's called, you do it for vacation, not for vacation.
Yes.
Yes. Because if you do it for vacation,
yes.
6 months, you make a lot of money, and now you have a rooftop.
Yeah.
Well,
that's what I do. That's what I do. Next week, I'm trading in the traditional market. I trade 4 months a year. Season. Stock market earnings season starts next week. And next week, for a month, I'll be focused on traditional trading. then I have 3 months of not trading at all, then I'm trading for a month. That's what I do. But again, it's not Bitcoin, it's traditional options trading for earnings season. All right, so let's see. If this candle goes lower, I'm lowering the stop loss. Yeah.
So if there would like now happen very bad news like the big country bans, the market's freaking out, where would you look to this support for the technical analysis?
I wouldn't look for support. I'd be happy that I'm in the trade profiting from the crash.
Yeah, but if you're not day trading or anything, or you're long.
Well, I'd have to look at a higher level time frame. Let's close this trade, and then we'll take a look at a higher level time frame. Because if I jump to a high level time frame, and that's the thing, right? Like, I'm watching the trade. Like, if you start like looking around other stuff, you're gonna realize, oh my God, what happened to my trade? I mean, it's a job. It's really a job you got to focus on. So the next candle is a 9. If I see a 9, I'm looking to exit. Also, look at the 200-day moving average. I'm looking to exit. Lower my stop loss. Profitable trade. In fact, I'm not gonna. I got 10 seconds left. Let's see what the next candle starts to look like. So final candle, you see the 9 with an arrow, tells me I need to really be careful here. So I'm lowering the stop loss. Candle number 6. Color is already starting to flip on me. Blue line is where I'm going to get taken out of this trade. Okay, or lower. If it goes down any lower, I'm going to take my profit right here. I'm taking my profit. Maybe not all of my profit, but at least half of my profit. I shorted $1,000 worth of Bitcoin here, another $1,000 worth of Bitcoin here. Loss. So, I mean, I don't know, what's the price here? 11,470. What's the price here? 66. And this is 11.3. So, I mean, it depends on your position size. It depends on your leverage. But this is a class more towards identifying when to enter and when to exit a trade. So this candle is looking good. This candle has a 1.5 minutes to go point. I'm going to lower my stop loss. You see how I'm now going to be shrinking these things. I want to get out of this trade for the purposes of lunch, but also for reality. So at some point, one of these things is going to hit. If the next candle goes even lower, I'm going to lower the stop loss again. Eventually, these things will come so close to each other that I'm pretty much exiting the trade any second. 1 minute to go in this candle. Yeah, guys, for those on the live stream, I shorted here. I doubled down on the short there because of the break, because of the no double bottoms rule that I have. I also shorted here initially. The red 2 was trading below the red 1. I now have a 9 buy indication telling me that this short trade should be coming to an end. I'm letting this candle play itself out, but I've lowered my stop loss to just above the current candle. And hopefully it'll fall into the yellow. It's funny, like you short Bitcoin and now you want like the whole Bitcoin ecosystem to die just so that you can make a little bit of money or look good on a video. But that's the reality of the situation, right? And this is why I hate people that push Ripple. I mean, it's complete garbage, but they're making money if it goes up. So they try to convince you that it's a useful product. It is, but it's irrelevant. You need the shooting star at the top of a trend, not at the bottom of a trend. This is a doji at the bottom of a trend. freeing, but again, with 3-minute candles, I don't take any candle pattern all that seriously. With really small time frames, how a candle looks like is not really all that important.
What's the moving average period? What's the period when you're looking at 5 minutes?
They just adjust. It's always 50.
60 what?
Oh,
1 what?
candles. Right. So when the candles are daily, it's 50 days. When the candles are 3 minutes, 3-minute candles. Right, because there's no reason to look at the 50-day average on 3-minute candles. Right. I think you guys get the point. So either I'm getting out on this yellow line along with the 200 period moving average, or I'm getting out on this blue line. We're going to cut this stream. I didn't really talk about the price of Bitcoin or my outlook for the people on the live show. This is the seminar. Okay, it's moving. Like the blue line is going to get hit, which makes sense because I'm coming off of a 9. I would actually be looking to buy this thing back into 50-day moving average, 50. But anyway, all right, let's call it a day, guys. Let's get a quick bite to eat. I'm actually going straight to the theater to set up my other presentation. And then I'll be back here doing this one more time. Thanks, guys. Yep, there it is. There it is. There it is. There it is. We broke it. Stop loss. I don't know. Maybe not.